Did you know that despite a number of problems, Cathie Wood is still positive on Tesla stock? The top EV manufacturer is beset with problems left and right, according to detractors and ardent Tesla supporters. Continue to tune in and observe to learn more about Wood's position about Tesla. Many investors believe Tesla has enormous potential, particularly considering that it was the pioneer of the electric vehicle industry. Some analysts argue that Tesla is too far ahead of its investors, even if the business would need to work hard to keep up its dominant position in the EV market. You will learn what Cathie Wood thinks of Tesla today. One of the hottest stocks right now is Tesla, an American sustainable energy and automotive business that develops, builds, leases, and sells electric automobiles, as well as energy generation and storage systems in the US and other countries. With aspirational and environmentally conscious objectives, Tesla rose to global recognition. In actuality, Tesla leads the market for electric vehicles, with other manufacturers trailing closely behind. According to Forbes, Cathie Wood is an American investor, a renowned stock picker, and the founder, CEO, and CIO of ARK Invest, a $60 billion firm that makes investments in cutting-edge fields including genomics and self-driving cars. Because of her ability to persuade others with her investing arguments and her track record of success supporting her surprisingly astute claims, Cathie Wood is frequently referred to as the most underappreciated investor in the game. Additionally, she is well known for giving monthly updates on a variety of topics, including innovations, monetary and economic policies, what to expect in her area of expertise, and her thoughts on Fed decisions. The United States Central Bank, the Federal Reserve System, or simply the Fed, is in charge of overseeing the country's financial and monetary systems. Cathie Wood, CEO of ARK Invest, has never been afraid to make audacious forecasts. She set a price estimate of $4,000 per share for Tesla stock in February 2018. That price estimate suggested a market capitalization of $720 billion, but that was prior to the split. Given that Tesla's valuation at the time was only $60 billion, that estimate caused quite a stir on Wall Street. That's not how many experts swing for the fences. Looking back, Wood seems to have made the right decision. Tesla's market capitalization last year topped $1.2 trillion, and the company is currently valued at $810 billion. Some investors are questioning ARK Invest's other audacious valuation model in light of the call's relative accuracy. According to a recent research, the stock of the well-known streaming platform Roku is expected to rise by 850% to $605 per share by 2026. However, Cathie Wood anticipates that in 2026, a share of Tesla will cost $4,600. As previously stated, Wood's optimism for Tesla is not new. An open-source valuation model for Tesla stock was made available to the public by ARK Invest. According to the company, this strategy offers investors a more transparent method to view the research that ARK Invest has conducted on a significant investment. ARK analyst Tasha Kinney stated last week on her blog, although tuned to our expectations for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026. When it came to Tesla's potential robo-taxi business and capital efficiency, ARK revised its price target after stating last year that it believed the company's shares would reach $3,000 by 2025. Updates to capital efficiency calculations, autonomous ride-hail assumptions, and 2026 expectations are all included in the company's 2022 Tesla research. ARK has established a price target of $4,600 for Tesla by 2026 based on the aforementioned model. Based on this model, ARK determined that there is a 25% chance that in a negative scenario, the value of Tesla shares in 2026 would be $2,900, and in a bullish situation, it will be $5,800, and in a bullish situation, it will be $5,800. With a decrease from $84,000 to $7,700, Tesla's capital expenditure per extra unit of capacity has improved. Formerly, ARK anticipated that Tesla would invest $6,000 to $8,000 for each additional unit of capacity in 2025. However, as of right now, the company projects that it will only invest $2,000 to $7,000 for each more unit of capacity in 2026. Regarding Tesla stock, what are your thoughts today? Post your ideas in the space provided for comments below. ARK Invest estimates that in 2026, Tesla's robo-taxi operation will generate over half of its estimated earnings before interest, taxes, depreciation, and amortization EBITDA, and 62% of the company's enterprise value. In terms of earnings, it is anticipated that in 2026, the EV business will account for 57% of Tesla's overall earnings, with the robo-taxi business accounting for 34%. In the worst case scenario, the corporation would have made $372 billion in sales, a compound annual growth ratio CAGR of 24%, and a share price of $2,900 with a market cap of $3.3 trillion in 2026 if 10 million units were sold, taking into account a positive scenario wherein 17 million units are sold in 2026, resulting in $513 million in revenue. Additionally, Tesla's share price would reach $5,800, giving it a $6.7 trillion market cap. A 42% CAGR would be included in that. This is presumably the reason Cathie Wood believes this stock has a 560% upside. Wood regularly buys EV stock, demonstrating her support for her confidence. As of June 21st, it has a weighted of 7.23% across all ARK Invest ETFs, making it the largest position overall. Previous to that, in the first half of June, the Cathie Wood-led ARK Invest Investment Management increased the number of Tesla shares in its portfolio, increasing its exposure to the manufacturer of electric vehicles for the sixth time this month. ARK Invest purchased 300 Tesla shares, valued at an estimated $198,801 in value. Electric vehicle EV sales doubled globally to 6.6 million units in 2021, and the trend is still going strong. The International Energy Agency reports that in the first quarter of this year, EV sales increased by 75% year over year. And among all the EV producers, Tesla is at the forefront. Similar to several manufacturers, Tesla experienced a 22-day production halt at its Gigafactory Shanghai in late March and early April as a result of China's stringent lockdown procedures and an increase in COVID-19 instances. It's difficult to predict with certainty what will happen to Tesla stock over the next few months, given that Tesla CEO Elon Musk has issued a warning over the path of the U.S. economy. However, if the first and second quarter profit reports were any guide, Tesla has been operating as it should. In addition, Tesla's Fremont facility set a new record for daily production output this month. Meanwhile, Gigafactories Berlin and Texas are also stepping up their production. Not to mention the future income streams from driverless ride-hailing cabs and the Optimus humanoid robot, Tesla continues to lead the electric vehicle market and is well positioned to venture into new technological frontiers. David Traynor, CEO of New Construct, stated after the current decline, Tesla has been down every day, therefore it's going to be challenging to hold onto a stake when the stock has been falling so sharply. However, I also believe that it does indicate a slight shift in confidence. He continued to say a lot has happened in the last few months that would give anybody with a sense of fiduciary duty pause about what to think about Elon Musk and the businesses he's involved in. Wood is still a strong supporter of Tesla, though. Indeed, Wood stated in an April interview with Yahoo Finance that she still has the utmost faith in Tesla. After Wood disclosed that ARK had met with Mary Barra, the CEO of General Motors, she made this statement. Before Toyota overtook it as the biggest car maker globally for 77 years, the United States' largest automaker, General Motors Company, is a multinational American corporation that manufactures automobiles. Why does Cathie Wood think that Tesla stock can make someone a millionaire? She claims that if you look at Tesla's revenue growth over the last 5 years, it has grown at a compound annual rate of about 48%. She underlined that it happened even during a period when Tesla was dealing with numerous difficulties. She went on to say that, in reference to both herself and ARK Invest, their projection for the following 10 years is between 50 and 60%. Time will tell if Cathie Wood is correct or incorrect with Tesla. It is known that ARK Invest has placed a significant wager on Tesla's future. Tesla is the second largest stake among all of the ARK Invest ETF's combined holdings. Approximately 6% of the fund is made up of Tesla, whose shares were bought for between $256.67 and $326.30. Remember to visit our channel, click the like and subscribe buttons, and watch more videos about Tesla stocks.